Hi guys, we're going to look at another question on this latest SBR exam on 6th of September. Okay, this time I'm going to show you the question 2. Okay, so one of the questions which actually tests students on accounting standards together with ethical issues, because as we know that the examiner is emphasizing more ethics in the new ACCA SBR exam. Okay, so we are going to look at this part of the question, which is regarding the factory subsidence. So now the company Farham has a production facility which started to show signs of subsidence since January. So actually this is an indication of impairment. Okay, now when a student read through this part of the question and you are able to explain to the examiner that this is an indication of impairment, so you are going to get a mark for that. Okay, and what is important here is that when there is an indication of impairment, an impairment review is required, because based on the accounting standard do not specifically mention when an entity must carry out an impairment review, but it is must carried out once there is an indication of impairment. So it is probable that Farham will have to undertake a major repair to correct the problem. So Farham does have an insurance policy, but it is unlikely to cover the subsidence. So the COO refuses to disclose the issue since there is no repair costs have yet been undertaken. Okay, so now there is a bit of issue here. You do have an insurance policy, but it's unlikely to cover. So that means this insurance policy is irrelevant to the subsidence. Now the COO refuses to disclose the issue since no repair have yet to be undertaken. Okay, now this will relate to another accounting standard, which is regarding the provision. IAS 37 will come in. So the big question mark is, should the entity recognize, or should Farham recognize a provision for the repair? Now the answer, okay, so a student who actually see this will get another mark. So there should not be any provision in this case. Now the reason to get that 1 mark, okay, it's not just a matter of indicating to the examiner there is no provision. Now if you have been under me before, you know that to recognize a provision there must be 3 recognition criteria. So in this case there is no past event that leads to a present obligation. There is no past event leading to a present obligation. So this major repair is actually a future event. So student will get a credit for this. 1 mark will be given if you are able to tell the examiner that the major repair will not result in a provision, as there is no past event leading to the present obligation, because the major repair is a future event. So you are going to get another mark for this. Okay, so the COO does not think that the subsidence is an indicator of impairment. Okay, she argues that no provision for the repair should be made because there's no legal or constructive obligation. Okay, so I believe her argument is incorrect. It's not because there's no legal, but there's no past event. Okay, then reading further, Farham has a revaluation policy for PPE, and there is a balance on the revaluation surplus of 10 million. Okay, so nothing wrong here. None of this balance relate to the production facility, but the COO is of the opinion that this surplus, okay, the COO is of the opinion that this surplus can be used for any future loss arising from the subsidence of the, okay, that means basically the COO wants to set off any future impairment losses against the revaluation surplus. Okay, now will the COO be allowed to do so? Okay, the answer is no. Okay, the COO will not be allowed to set off the impairment loss against the revaluation surplus, as the surplus is not, okay, the surplus does not specifically relate to the facility. So a student who is able to explain this, all right, should get another mark. Okay, so a candidate who actually write that, you know, you cannot set off your impairment loss against the surplus because this surplus does not relate to the factory or the facility, you will get a credit for this. Okay, and finally, you will get the marks if you are able to discuss on the impairment, because the whole question is actually arguing the COO do not think that the subsidence is an indicator of impairment. Okay, so basically student will get a credit if you are able to discuss that an impairment review is required, so when the CA is more than the recoverable amount. So explaining on the value in use, okay, of a CGU, and also the fair value less cost to sell. So you will get credit again for this part of the exam question. Okay, now moving on a little bit further. Okay, so that will be regarding the part A of the question. Okay, then that will be 5 marks. Okay, then discuss the ethical issue arising from the scenario. Okay, so including any actions which Farham and the accountant should undertake. So ethical issues arising. Now we can actually see very clearly, okay, the ethical issue. The COO refused to disclose the issue, okay, although she is aware that this is contrary to the international accounting standard. Okay, so what happened here is when the COO refused to disclose, this is actually a form of manipulation of financial statement. So when the COO refuses to disclose, even though she is aware that this is contrary to the international accounting standard. So you're going to get 1 mark, okay, if you are able to indicate that knowing that this is contrary to the accounting standards and you refuse to acknowledge, so this is a form of manipulation. Okay, so you will get a credit for this. Now, the second thing is, why do the CEO refuse to recognize? Now, relate, okay, this is obviously self-interest, okay, or personal interest, because the COO is actually receiving a profit-related bonus scheme for its manager. So this could be the potential reason. So self-interest is attributed to the reason why the COO refused to recognize. Now, another important point that you should highlight is regarding when you explain this self-interest, the responsibility for the financial statement, okay, lies with the manager. Okay, so a director is responsible for the financial statement. Okay, now there is something very, very tricky. I believe a lot of candidates actually overlook this part in the exam. Now, the part that's it. Okay, the COO argue no provision for the repair should be made because, okay, actually the CEO is not wrong in this place, but in terms of ethics, okay, there is something wrong with the accountant as well. Now, as an accountant, we have a professional duty, okay, so now we must know, okay, what can and what should not be included. So we must carry out our work with due repair. So it is unacceptable, okay, for the accountant not to be able to know that there should not be a provision. So in the first place, the COO do not need to argue regarding the provision, because as an accountant, we should have the knowledge, the professional knowledge, and we should not requested the COO to recognize any form of provision for the repair. And we should also talk about the part where, as an accountant, although it is the responsibility of the management for the financial statement, but we have a duty to ensure the financial statement is true and fair and comply with the financial statement. So that will give you the marks for the ethical aspect. Okay, so hope this video will help you in your exam. See you in the next video.